Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Welcome to another episode of Reverse Mortgage Radio. I'm your host, Bruce Simmons, and I really appreciate you joining me today. In a recent survey, BlackRock had earlier this year, they had here 60% of people fear outliving their retirement savings, and 80% say that it affects their mental health. Now, a little caveat here, because this survey included people of all ages. So they just say 60% of people. Personally, I think if they were just surveying people who are either at or very near retirement, that number, 60%, would probably be a lot higher, more like 75 or 80%. Depending on whether or not you have a plan. People who have a plan and are working with a financial advisor probably don't fear as much about outliving their retirement savings. But you know whether or not you've got enough to make ends meet in retirement or to have that savings last until you're 85 or 90 or 100 years old. But a lot of people don't have that plan. The majority of people do not have that plan. And even when you have a plan, you're still feeling the pressure of living within a budget. I know my wife and I have just met with a financial advisor, and we're planning our retirement here probably in the next 8 to 10 years. And we're getting all the information to the retirement advisor. My son called. He's in law school up in Idaho. He says, hey, I don't have enough money. My student loan didn't come through. And I'm like, well, we have to send him some money. And my wife's like, well, that's going to mess up our plan. and I said, honey, we're not even in the plan yet. And we're talking like $1,000 helping him out. But that's the mindset that people have, is these extra expenses are going to screw up your plan. And it causes additional stress, right? There's one quote from the BlackRock CEO, Larry Fink. And no matter what you think of him, I'm not a fan of Larry Fink at all. I don't like him. But he has a very poignant comment here. He says, we focus a tremendous amount of energy on helping people live longer lives, but not even a fraction of that effort is spent in helping people afford those extra years. So today, what we're going to talk about on Reverse Mortgage Radio is what's really the number one fear of people in retirement. It's outliving your retirement savings. And that's if you have savings. A lot of people don't, because there's another Georgetown University Center for Retirement Initiatives. There's a lady there, Angela Anatolian. She wrote an article recently, and she says here that just Americans are not saving enough money. In 2015, the Government Accountability Office found that half of households approaching retirement, so they're age 55 or older, had no retirement savings in a defined contribution plan or an IRA, and that half of households age 65 and older relied on Social Security for most of their retirement income. The median amount for 48% of households 55 and older that had any retirement savings at all was just $109,000. And 55% of households age 55 to 64 had less than $25,000 in retirement savings. 41% had zero. So we're not saving enough money. We just flat out are not saving enough money. Now, maybe you're the exception, and if that's the case, that's awesome. But even if you have $2-3 million in savings, you're probably spending a whole lot more than somebody who maybe has 200 or 300,000 in savings, right? Because you've got a more expensive house, even if you have no mortgage. Your taxes, your insurance are more expensive. You like to travel more. Your monthly budget is a lot higher. You've got more expensive vehicles that maybe require premium gas or that require more maintenance or have bigger car payments. You might have a boat. All these extra things, our lifestyle tends to grow to whatever budget we allow it to, right? Or beyond the budget we allow it to. So even if you're in really good condition, or what a lot of people would think is good condition, you got $1 million in savings, that may not be enough to suit your lifestyle for the next 30, 40 years, maybe, depending on how old you are. If you're 65, you might live at least, you could very easily live another 30 years. And so living longer is great. I think it's great, but then the amount of expenses as you age will increase. I just this week met with a couple, super nice people, but the wife had to go to a nursing home, and temporarily they're trying to get her out, but they're in a multi-level home and she can't do stairs now, and they have burned through their retirement savings. They're basically out of savings. Now, luckily, they still have a lot of equity in their house, but it's a house that has multi-levels, and she can't really live in that house as comfortably as she'd like to. They're thinking, okay, well, if they sold that house, then they could buy a new one with a reverse mortgage, possibly, but that's a lot of work, and they're trying to get her out. They're spending like $12,000 a month on her care, and it's extremely expensive. If you don't have long-term care insurance, or even if you do, there's still expenses involved. So all these factors can play into and cause problems for your quote unquote retirement plan, right? We all enter a plan. What is it? Man plans and God laughs, right? Isn't that what the saying goes? Something similar like that. So today we're going to talk about the fears, how the problems that people have, but we're going to talk about how a reverse mortgage could possibly help you out. But before we get into the meat of the topic here, I do want to let you know that you are listening to Reverse Mortgage Radio. My name is Bruce Simmons. I'm the Reverse Mortgage Manager for American Liberty Mortgage in Denver. You can reach me directly at 303-467-7821. That's my direct line, 303-467-7821. You can also visit me online at reversemortgageradio.net. reversemortgageradio.net is my website, and you can go there and download my consumer guide. I've got a very detailed consumer guide about reverse mortgages. It's completely free. I'm not going to be bugging you. You're not going to get a ton of emails or a bunch of follow-up calls or anything like that with me begging for your business. I don't do that. So visit me at reversemortgageradio.net, or just simply give me a call, 303-467-7821. Now, I do want to touch also on what is a reverse mortgage, because we always get different people listening to the show. I have a lot of people that listen every week religiously, and I really appreciate you. But a reverse mortgage most often is an FHA insured loan that's specifically designed for people that are 62 and over. It allows you to convert a portion of the value of your home into cash that you can spend. As long as either you or your spouse are living in the home, you're keeping current with your property taxes and homeowners insurance, you're maintaining the home, and you keep your name on title, no payment is required. It's an optional payment. We have people that do pay, but most people don't make any payments on this loan. So you're keeping that principal and interest portion of your mortgage payment that you would normally pay out every month in your pocket, which increases your cash flow. And as we know in retirement, cash flow is king. That's the most important thing. You could have $1 million, but if it's all tied up in your house and not creating any income for you, it does you no good. Income is what you need in retirement. And the reverse mortgage helps improve people's cash flow. That's the goal with it. The house stays in your name It's still your house. You can paint it purple, add a bedroom. You can sell it at any time. A lot of people think that you're stuck in your house if you have a reverse mortgage, and that simply is not the case. If you sell the house, all the equity that's still in the house is yours. And you're still charged interest every month because this is not free money. You're charged interest and mortgage insurance every month. That money that gets charged to you, you're not paying. So it gets added to your loan balance. It increases the amount of money owed against the home. Every month you get a statement in the mail, and you're going to see that balance increasing a little bit or a lot, depending on your loan balance. But it's going to go up and up and up every month when you don't make payments on it. You have to be okay with that. If looking at that statement is going to cause you more stress than the benefits you get from not having a mortgage payment or not having access to that money, then you should not do a reverse mortgage. Okay? The reverse mortgage is intended to relieve financial stress, not create it. So I don't want any additional financial stress from the reverse mortgage. Like I say, it's meant to relieve financial stress because we have enough stress from worrying about money when we're in retirement. The big things too that screw people's plans up are increased life expectancy. I mean, we're living longer, right? Like the guy from BlackRock said, we're living longer, but we're not necessarily saving more. In fact, we're probably saving less. People are entering retirement with more and more debt. Something I think between 85 and 90% of my customers last year had an existing mortgage on their home. And it's probably about the same this year. The majority of people I work with have an existing mortgage. And the biggest reason that they're doing the reverse mortgage is to pay off that traditional forward mortgage with that mortgage payment so they could save that payment amount every month. I mean, I help people retire. They can't retire because they've got this mortgage payment. And when they eliminate that mortgage payment, now they still have to pay their taxes and insurance, but getting rid of the principal and interest portion of that payment allows people to retire or to live just a much more comfortable life. Inflation, even though inflation is shrinking, it's still growing, right? It's decelerating. It's not growing as fast as it was last year, but it's still growing at 3% a year. That means over the span of 10 years, you've lost 30% of your spending power in 10 years at a 3% growth rate. And that's not even including the compounding effect of it. The other thing that screws a lot of people up in retirement is marital issues. What we call gray divorce or silver divorce. When you get divorced after a certain age, now everything gets split in half and you're living on one income now, and it can be very, very financially stressful. Let's just leave it at that. Hopefully you're not in that situation, or if you were in that situation, it's in the past long enough to where now you're stable. But also too, the health effects of working longer. People are having to work longer, so they're not able to enjoy their retirement. So you're working till you're 70 or 75 years old. I've done loans for people in their 80s that are still having to work as waitresses. I mean, I did a loan for a lady that was a waitress until she was in her early 80s in a diner. That's hard work. And doing that in your 80s, I cannot imagine having to do that. But the reverse mortgage helped her be able to retire. And all of these factors are contribute to people's challenges in retirement and that worry. Okay, so let's talk about reverse mortgages and how it can help people with their financial security. What we do is it allows you to stay in your home, but yet eliminate a mortgage payment possibly, or create additional revenue sources. And whether that's just money set aside in a line of credit that you can access for emergencies, that's a huge, huge relief for people. Knowing that you've got money set aside if the furnace blows out, if your car breaks down, if your kids need help, if the house needs a new roof and you've got a $2,000 deductible. All of these things create stress if you know you don't have the money for it. If you're living on a $2,000 or $2,500 a month Social Security check with no savings, and debt too. If you're creating debt because you don't have enough income, now you've got credit card debt at 20 or 25%. You had to get a new car, so you got a used car, and you still had to pay $20,000 for it. It's crazy how expensive vehicles are now. I'm looking for a used car. I don't like car payments, so I'm looking for something in that range. And there's not a lot available. So not a lot of reliable stuff available, I should say. But anyways, that's a different topic for another day. But having that money available, if there's enough equity in your home, we can create additional monthly. I don't want to call it income because it's not income. If it were income, it would have to be taxed and all this stuff. It's just a revenue source, increasing a different revenue stream for you. So let's say you're retired, you own your home free and clear, and you just don't have enough money to make ends meet. There are really 4 different ways you can take money from a reverse mortgage. You could take it as a lump sum with restrictions. Okay, so you could take some of it as a lump sum. That means you can take $50,000 out to pay off debt or to get a new vehicle, whatever the case may be. But then maybe you still need $1,000 a month income. I'm sorry, not income, but $1,000 a month. We can possibly do that for you. And we can do it different ways. Maybe you only need it to $1,000 a month to last you until your Social Security kicks in at age 70. And if that's the case, that's usually a pretty easy fix if you have enough equity. Some people want it for the guaranteed as long as they live in their home, and we can do that as well. And then maybe you've got money left over to set aside in a line of credit. So we can set aside $75,000 or $100,000 in a line of credit. Imagine, would that improve your standard of living? Just knowing you have that, would that increase your peace of mind? I think for most people it would. For me, it certainly would. So we could do a combination of all these things, and no monthly mortgage payments are required. The other thing, too, is that it's a non-recourse loan. Remember I said you're still charged interest every month? Well, that interest gets added on over time to your loan balance, so your loan balance gets bigger and bigger and bigger. We're not loaning you 70% of the value from the get-go. We're very seldom loaning you even 50%. Most people fall between 35 to 45% of the loan balance. Now, with interest rates coming down, we're able to loan a little bit more money. But the older you are, the more money we can loan. The lower the interest rates go, the more money we can loan. As interest rates continue to come down, it just means we can make more of your equity available to you through a reverse mortgage. But we're only loaning between 35 to 45% of the value for most people. If you're in your 80s, early 80s or late 80s, we're loaning closer to 50% or 55%. But that's not a big percentage of the value of your home. However, if there's a big market crash in the real estate market, which I don't anticipate, but who anticipated 2008, right? Very few people. But if that did happen, your value drops, you continue to live in the home, no payments are required, you still have access to any money that's available to you. It cannot be closed out because it's 100% guaranteed by FHA, the Federal Housing Administration. And so what that means basically is that money is going to come to you no matter what. If you've got money available to you, it will be available to you. Okay? The bank cannot close out your line of credit just because the value of your home dropped. The reason they can't do that is because it's something called non-recourse. The lender is protected with mortgage insurance. All FHA reverse mortgages have mortgage insurance. That protects the lender. You're saying, well, wait just a minute. I'm paying for this, right? Well, technically you're not paying for it, but you're charged for it. You don't have to pay for it unless you make payments on the loan. But you are being charged for it. And it's protecting the lender? Well, by protecting the lender's not going to lose any money. So if your house ends up worth less than the balance owed on the reverse mortgage, the lender's not going to come after you, your estate, or your heirs for that deficiency balance. They're not allowed to do that. Your heirs will never be responsible to pay more than the value of the home. Odds are you're going to leave a home, say worth $600,000, you might owe $300,000 or $400,000 on it. Your heirs inherit the home, they sell the house for $600,000, pay off the $400,000 that's owed on it, and they still inherit $200,000. Now that's a simplistic way to look at it because there's closing costs and things like that, but they're going to get something most likely on the house. Now, people in 2008 and 9 and 10 who passed away, they owed more on their house than it was worth. They did not leave a debt beyond the value of the home to their estate. Mortgage insurance paid that. So that's one of the huge factors with the reverse mortgage, one of the safety features of the reverse mortgage. And just being able to increase your cash flow provides that peace of mind. Okay. Now, you do have to consider some of the drawbacks. I just want to touch briefly on this issue, okay, because we've talked about it before. I've done whole shows on the issues with reverse mortgages, why people think they're bad. Number one is the upfront cost associated with it. Remember, I just mentioned mortgage insurance and that you're charged for mortgage insurance. You've probably heard, I'm making an assumption here, but you may have heard people say, oh, reverse mortgages are expensive. Well, compared to what? What other kind of loan can you get that you never have to make a payment on as long as you live? And you're as long as you live in the home, okay? When you permanently leave the home, then the loan balance comes due. But what kind of loan can you get for that? What's that cost? It doesn't cost you any money directly out of your pocket because you're not making payments on this loan. You're not required to anyway. So there are costs associated with it. The big one is the mortgage insurance. The mortgage insurance goes to FHA, the Federal Housing Administration. And that's the upfront mortgage insurance premium is 2% of the value of the home up to a maximum value of $1,149,850. Okay? Or $825, I think. So that would be like $22,000. But that's not coming out of your pocket. It's coming from the equity in the home. Okay? And most people don't have $1 million home yet in Colorado. We're working towards it. But I think the average value is something like $600 and some odd thousand, which is still crazy, but that's what it is. There's also the impact on inheritance because, like I said, you're charged interest every month. Your loan balance increases. So you're going to have less equity than you otherwise would if you did not do the reverse mortgage. However, on the flip side, there's the idea of people giving with a warm hand instead of a cold hand. Maybe by doing a reverse mortgage today, you can help your kids out today or your grandkids with college or maybe a down payment on a house or helping them out if they are unemployed or finding themselves in a difficult financial situation. You're able to help now because you've got access to these additional funds through the reverse mortgage. You're giving with a warm hand instead of a cold hand. You're responsible. Like I said, you have to pay your property taxes, homeowners insurance, maintain the home. You have to live there as your primary residence and keep your name on title. You would do those things even if you owned your home free and clear. If you owned your home free and clear, you would not let your homeowner's insurance lapse. You would continue to pay your taxes and maintain your home as long as you had the funds to do so. Okay? A reverse mortgage is not suitable for everybody depending upon your situation. If you're living in a home that has 3 or 4 levels and is on 3/4 of an acre and you're 68 years old and your knees are bad, you probably don't want to get a reverse mortgage on that home. Talk to me about a reverse mortgage for purchase. You could sell that home and use the proceeds from that sale of the home as a down payment and use a reverse mortgage for the rest of the money to get into a new home without a mortgage payment. It's a great plan. It's what I plan to do when I get closer to retirement and I'm old enough to do a reverse mortgage. So you've got to understand the reverse mortgage. It has its pros and cons, obviously. I think the pros way outweigh the cons in reverse mortgages. I look at the peace of mind that I provide to people with a reverse mortgage, whether it's in the form of increased revenue every month or just eliminating the mortgage payment or having the peace of mind of knowing 100% that you've got this cash set aside in a line of credit that actually grows over time, that can never be taken away from you, that's there for emergencies or even long-term care. If you're 65 years old now and you can leave $100,000 in a line of credit and that grows over the next 10 or 20 years, it will double roughly in 10 years and double again in another 10 years. So that 100,000 could become 400,000 when you're 85. And maybe at that point you need some in-home care. That money can be accessed to cover those in-home care costs. Or it can help you pay the long-term care insurance premiums now as well. So just the peace of mind. I encourage people, if you have a financial advisor, talk to them about it and get their feedback. If they do not understand it, give them my number, okay? Have them call me. My number is 303-467-7821. Bruce Simmons. Have them Google me, Bruce Simmons, reverse mortgage, and you'll find me. It's very simple. My website is reversemortgageradio.net. But there are a lot of financial advisors that do not understand reverse mortgages. I love talking to financial advisors about reverse mortgages because so many of them have that preconceived notion. Oh, they're expensive. They're bad. They're all kinds of bad things. You know, they believe their retired plumber neighbor who thinks that reverse mortgages are bad because their mother-in-law's son's wife's cousin had a reverse mortgage and got foreclosed on. Well, it was because they didn't pay their taxes, not because they had a reverse mortgage, right? So there's all these just in the ether about how bad reverse mortgages are, but they're not. You learn the facts, you gather the information, and you make an informed decision. And I can help people get the facts. I don't pressure anybody to do it yes or no. My big thing is getting the information so you can make an informed decision as to whether or not a reverse mortgage makes sense. So go to my website at reversemortgageradio.com. Download my consumer guide. It's free. Go to reversemortgage.org, reversemortgage.org. That's the National Reverse Mortgage Lenders Association site. They've got a lot more money than I do to spend on their website. But there's just so much information, good information about reverse mortgages out on the internet that you can find. But feel free to call me too. My name is Bruce Simmons. I've been specializing in reverse mortgages for 21 years, and I'd love to help inform you about how they work. My number is 303-467-7821. Not everybody qualifies for these. I don't know if you qualify or not. You don't know if you qualify. Give me a call. We can talk about your situation and find out if it makes sense for you. Thanks so much for joining me today, and I hope you have a fantastic day.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821 or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.